Welcome to the Poorverse Standard YouTube channel. Thanks for tuning in. This is the very first thing I've uploaded to YouTube, so be gentle, and we'll get into it. We're going to discuss kind of sort of what to do with all the information that's at our fingertips anymore, and how to sift through it and figure out what to do. So, without any further ado, let's get into it. Basically, the meat of the episode, we named it YouTube, Market Noise, and You. We literally have, just... This is going to be a little fun. I'm going to try and do like a gym class hero, run every emo band's name into one song like they did in the Taxi Cab. But I'm going to run all the YouTubers that I know of, their names. I'm going to run through them. If you've heard of them, great. If you haven't, maybe check them out. It's where I do a lot of my listening to find things, and then I do my own research. So let's get into it. YouTube. They are many. They are legion. There's just so many sources for you to get your news from anymore, let alone your stock market news. I mean, there's, the old school CNBC kids, the Fox Business Channel, and then you have your YouTube podcast kids like Millennial Money Quartet, which is Meet Kevin, Jeremy of Financial Education, Graham Stephan, and Andre Jank. Jick. And then Charlie, the Zip Trader Charlie, Dead Inside, some lesser known YouTube channels like My Financial Friend, Richard Allen. I mean, that one, he's exceptional. He does fun videos and sometimes has, the hair of a late 2000s club scene enthusiast. You have Tom Nash, the Irish investor, Jack Spencer, and one of my personal favorites is the Walrus of Walrus Street, who lives in South Korea and does market research while you sleep. Then you have, services like Seeking Alpha, Motley Fool, Yahoo Finance, experts who grade stocks and give them, I'm going to upgrade the price, downgrade the price, fund managers, people who release their monthly newsletters. But all of them, they give you information, and hardly any of it jives with any of the other sources. So, if everybody agreed on their takes on companies, then we would all, make the same moves, and the market would be a very boring place because the market is a zero-sum game. Your loss is someone else's win, and your win is someone else's loss. If everyone did everything the same, you would never have people willing to sell, and the market would cease to function as we know it. Tesla wouldn't have been able to have one of the short funds lose $500 million over the course of the last year. And things like that, they wouldn't happen because everyone would be making the same moves because we would all be able to predict the future. So this kind of leads into the question of how do you distinguish who to listen to? How do you decide which camp you fall in? How do you decide what moves you're going to make? You hear the news that the Fed is going to raise rates and the market's going to tank and the sky is falling and it's time to sell. What do you do? I guess to get to the crux of the issue, it's all noise. All of it. Everything. Every single thing. CNBC, Seeking Alpha, Meet Kevin, myself, all noise. You are listening to other people's opinions and hoping they did the right due diligence and that their thesis is correct. But if you remember, we don't all agree, and nobody's right 100% of the time. Most recent example, Charlie of Zip Trader literally just released a video about XL Fleet and how he's letting go of it because they've failed him. They've failed to meet their, expectations. And they're down significantly because of tech sell-off, a massive revenue loss, short report. Literally, he released a video about 2 days after I released the latest DD video on XL Fleet. basically disagreeing with him, saying that XL is one hell of a short-term gain, which it was when I made that video. We bought it under 8 and it shot up to almost 10 and sold it off then and there and waited for it to come back down. But it's also, a long-term play when it came back down. 5 years, if you can buy it under 8, the lower the better, obviously. I'm still pretty bullish on the fact that it's going to be much higher than it is in 5 years. We disagree, Charlie and I. He's been a YouTuber longer than I've been a podcaster. Our opinions are different. One of us will be right, one of us will be wrong. Who's right? Don't know. But that's not the right question to be asking. The right question is, how do I determine who's right? And as we always preach, you need to be doing your own due diligence before you invest a dime and make your own conclusions. So don't do things based on news. To a larger extent, in a market example, don't listen to CNBC, Fox Business, and let them, run you into an excited delirium about how the markets are going to crash because blah, 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 because the sky's always falling with those guys. Bad things are always happening. China's fault. Every day it's just doom and gloom because that kind of news sells. They want people to watch their programs, so always gloom and doom. But it doesn't matter. If you sold out every time panic hit, you never make any money. The market continuously goes up over a long enough scale. Take a look at the S&P since the 90s. We're all but hitting, fresh highs every single day in the S&P and some of the other, markets. I mean, we just hit $410 on SPY. Are you kidding me? I mean, basically, since the bottom of the pandemic, we've almost doubled. That's insane. But, as usual, we're back again talking about that there's no substitute for time and market. If, to borrow a phrase from Rudy of Alpha Investments, if you stay the course, you'll be rewarded. You have to zoom out sometimes and look at the larger picture. And, unless you're unable to see the forest through the trees because you've listened to the market news and noise. Now, I'm not saying you can't or shouldn't get investment ideas from people such as YouTubers and podcasters like myself. I'm not trying to coax myself out of a job here. I'm just saying that people in this space are, they're fallible. They are human. They get things wrong. Sometimes more than others. However, getting opinions from like-minded individuals is a great thing. It can help you grow and understand and, educate yourself by looking at a thing in a particular perspective that you otherwise would not have if you didn't see, listen, or hear that perspective from someone else. That's how you grow as an investor. You learn, and you can learn from others. That's a perfectly acceptable way of doing things. But you still need to make sure that you're putting in your work as well. So to sum it up, I guess, having the opinions of others, such as big successful YouTubers and CNBC folk, seeking alpha people, and even hedge fund folks, it's not inherently bad, but you have to temper it. You have to be willing to tune it all out sometimes. Look at the companies you're interested in as if you knew nothing about them and learn everything you can about those companies that you want to invest in before you put a penny into that. Because at the end of the day, the only person responsible for your money and your monetary decisions, that's you. The buck literally stops with you. So get out there, do your homework, and show us who's boss and show us those massive gains you get. If you liked what you saw here, feel free to find the full version of the podcast on Google Podcasts, SoundCloud, wherever you find podcasts. We're Poor V Standard. We're everywhere. Thank you so much for tuning in, and we'll see you next time.